All right, yes. So fair value gap session number 7, and in this session, I wanted to go over a couple of things, but I wanted to dedicate this session to one thing in particular. And I thought it would be the perfect moment because that's actually what we currently encounter as well in the market. Reversals, and not necessarily reversals as in also how to spot them, but the transition of order flow. I want to dive into that a bit more in depth as well. When we are running into resistance, for example, how do we approach that? How do we, for example, right now read on the lower time frame that this fair value gap actually wants to push lower? And yes, of course, that is where our entry pattern comes in on the 15-minute time frame, etc. But we can dive into that a little bit deeper to have a little bit more confidence going into trade, for example, to also have a little bit better understanding. Now, let's actually start off with this monthly fair value gap that we have right there, because it's all fractal and it happens over and over and over again. And right here on this monthly fair value gap, as we understand context, we can just push lower off of this monthly fair value gap right there. Meaning we can target the previous month's low after the swing low. We understand context. Now, after that, what we want to do is we want to find the first fair value gap going into the monthly fair value gap. So I'm going to go over this quite a lot of times, and that's why I want to dedicate this session alone to reversals, because it might be a little bit confusion with this fair value gap, that fair value gap. So when we have this premium array, the bearish fair value gap, we want to see and we want to find the first bullish fair value gap that went into the bearish fair value gap right there. Meaning we go down a time frame. Do we have a bullish fair value gap currently going into the bearish fair value gap? No. Perfect. So we go down another time frame. Then we go down onto the daily right there. And in the daily time frame right here, do we have a bullish daily fair value gap going into the bearish daily fair value gap right there? Cursor not visible. So when we have a daily fair value gap going into that monthly fair value gap right there, that indicates that we have momentum in the first place, right? Remember one of the first sessions that we had, we always expect momentum when we create a fair value gap. Then after, when you say into, it means in the leg that enters that fair value gap. Yes, into, I mean, for example, like this, right here. When I say daily fair value gap into, I mean that this fair value gap right there is pointing into the monthly fair value gap, meaning it's displacing into the monthly fair value gap, if that makes sense. So it can be anywhere from the recent leg into the monthly fair value gap right there. Indeed. Yes, exactly. So that is important to know because, again, we assume momentum, where when we arrive at a reversal area, fair value gaps are not necessarily momentum anymore. Unless they are in our favor, they can also create manipulation. So that's something we have to be very careful about. Where when we then mark out the first daily fair value gap, so actually the first fair value gap that was responsible for moving into the bearish fair value gap right there. This can be on any time frame, right? So I'll also show you different examples after this. Then this will be the transition area. Meaning we either disrespect this fair value gap immediately, we continue lower, and we disregard that fair value gap immediately. That's ideally seen by a close below that daily fair value gap. But again, a daily close or a close below a fair value gap does not mean it is fully disrespecting it at all. Because what if it's a small close below it and we sweep the previous day low right there to then continue higher, right? So that is not a full disrespect. Well, another way of seeing that disrespect is seeing the transition of order flow. And what I mean by that is seeing very clearly almost the order flow switching, the order flow changing. And the way we can see that is by discount arrays, which is that fair value gap right there, trying to push higher right now, failing to do so. And then we create bearish fair value gaps off of that. So once we do that, that becomes the transition of order flow, which we could also see as not the cleanest sharp turn, but when we understand what is going on beneath it right there in depth, then it becomes a lot clearer and it becomes actually a very great sharp turn because you have a great switch of order flow right there. It's visually seen, the switch of order flow. And the switch of order flow here is this, of course. When we come into that daily fair value gap right there, we have a nice rejection actually of the daily fair value gap, a huge up candle with a nice rejection. So the only thing the next candle here can do on the daily time frame is expand higher. That's the only thing it can do, because if it does not do that, then that daily fair value gap becomes weak and we expect lower prices. Which of course, when we have a monthly fair value gap right there, that's ideally what we would want to see. So the area where the transition actually happens of order flow from bullish to bearish, we need to understand that the transition area is a 50-50 area right here. And that leads me back to understanding the stages of probability, which we went over in the foundational enrollment. And the stages of probability is also waiting. It's waiting until you get the right confirmation right there that we actually want to continue lower. So the earlier entries right here, they can get you very excited and can potentially also cause a little bit of concern that you might miss the move. And when you see that, or when you notice that in yourself, you need to remind yourself, be patient. That's very important in this situation. Because once we have the resistance area right there, the transition of order flow area taken over, that's exactly when we can expect the higher probability price action. So how do we know when that first transition area right there is actually overtaken? Well, this is a daily fair value gap in itself, right? So when we go into a time frame, into the 4 hour, for example, we want to look for a bearish fair value gap that went into the daily fair value gap right there. So if we go down the time frame on the 4 hour, what is the 4 hour fair value gap that was responsible for pushing price into this daily fair value gap? That was this one right there. So now we are establishing all kinds of 50-50 areas because we have the monthly fair value gap, but we can even sort of ignore the monthly fair value gap right there, because now it's a question between the 4 hour fair value gap and the daily fair value gap right there. Where after that 4 hour fair value gap, you can go into a 1 hour fair value gap, for example. If we look at that actually, let's see if we can find an example. Then what would be the 1 hour fair value gap that was responsible for pushing price into that 4 hour fair value gap right there? Is there even one? Let's see. There is one right there. So every area that you find right here at the first transition of order flow, all these fair value gaps are not the highest probability fair value gaps, meaning that they are not likely to have a beautiful sting into them to then continue lower or higher off of them. No, this area, the whole area between this high and that fair value gap right there, is low probability for any fair value gap to be created right there. So that is a great filter to understand which fair value gaps we actually want to look to trade in the first place. And this is low probability until we disrespect this first daily fair value gap that we came into, because that is the first resistance that we ran into when we came off of the monthly fair value gap lower right there. And how do we know we are actually disrespecting this right here? Well, we can know that by going into that 4 hour, because that is where we also had the 4 hour fair value gap lower right there. That was again of that of that daily fair value gap. The 4 hour fair value gap that came into that daily fair value gap was sitting right there. Now, after we confirm order flow on the 4 hour and we continue lower, an ideal scenario, what we would want to see is that we close below that resistance area right there with a daily fair value gap, which at this moment in time, we do not actually close below it right there. I'm not using that daily fair value gap as any sort of resistance or any sort of resistance now turns support. But what we can see is support turn resistance actually. We want to be accurate right there. Then that resistance that we have, or the support that we have right there, once we close below it, it is fully overtaken, meaning there's nothing interesting anymore. And it's also the reason because we have it swing low right there, right? That we are currently respecting. So once it's fully overtaken, we are closing below it, we have a fair value gap going below it. That is exactly when we can assume that there's no resistance at the transition of that order flow anymore, meaning that we can confidently look for our entry pattern. So two ways to go about this, because you can either ignore this daily fair value gap, which in my opinion is not a wrong approach here. The approach here with understanding the transition of order flow just brings a little bit more clarity. Where right here we have the sharp turn, we then create the re right there, and once we create the re, the new fair value gap going lower, that in itself is already an entry. But we do on the lower time frame have messy price action, and now we know why as well, because the transition of order flow is not fully done yet. And once we close below that daily fair value gap right there, that is exactly when we can assume that the transition of order flow is done. So this is where the nicer price action will happen. Now, with that same premise, if we now go into the daily time frame right here, and we take a look at the daily fair value gaps, then after, we can just look to deliver and to continue lower. Now, there's a choice to be made because we have a daily fair value gap sitting right there, and we also have a daily fair value gap sitting right there. And when we choose between two of the same daily fair value gaps or two of the same fair value gaps in general in the same leg, it's very important to understand a question, or you ask yourself a question. How fast are we delivering towards the drawn liquidity? How fast is price willing to run right here? Are we in high probability conditions? Yes, are we in high probability conditions? Well, yes, we are on that sell side right there, and we expect context to follow through. So I would assume that we are in high probability conditions. That automatically means that we are likely in fast price action as well, because high probability usually equals fast price action. So right here, if we are in fast price action and we expect a move lower instantly, then we are not going to look to trade off of this daily fair value gap. I would even argue that if we come into that daily fair value gap right there, that's not super high probability. Why? Because then the retracement becomes all of a sudden very heavy, disrespecting a premium array right there to then continue lower off of that. That doesn't make a lot of sense to me. Because if price is high probability, it wants to deliver fast. It wants to do it very fast right here and continue lower towards those lows right there. Meaning we can only get a sting into that daily fair value gap to then continue lower off of that. Now, let's say that we do not do that. And we do disrespect this daily fair value gap right here that we have. So we have a backup plan, or we need to create a backup plan. In first instance, we understand we want to trade off of this daily fair value gap, purely based on the momentum, on the speed of price action. But of course, we might not always do that. So we can also deliver into this daily fair value gap right there. And when we do that, we need to understand, and this is where we need to be extremely picky about our price action. We need to understand that that needs to be a very fast move right there and only a sting into it to then continue lower right there. No comfortable close inside the daily fair value gap. No comfortable things at all. It needs to be an aggressive move higher and lower immediately, leading to a great sharp turn on the lower time frame as well. And the reason being for that is because that still shows clear intention. Still clear intention that we actually want to continue lower after disrespecting a fair value gap like that. It's very important. So right now, what do? Well, we can just go into the 15 minutes and look for our entry pattern right there, which again is a great approach. Don't get me wrong. And if you do that, and if you do not want to look at the transition of order flow, then I also do not want to force you to do so. So don't feel forced to do so because you don't need it, but it brings more clarity. Then right here, if we find the fair value gap that was responsible for pushing into that daily fair value gap. So we need to find a bullish fair value gap right now, which is why we go down from the daily to the 4 hour to the 1 hour to the 50 minute. Whichever one we find first is the resistance area. So we go into the 4 hour first to find a bullish fair value gap that was responsible for pushing price into the daily fair value gap. And we see a very small one right there. Right there. But this one has already been traded into before we actually reached the daily fair value gap right there. So this, when we already trade into it before we reach the opposite fair value gap, I'm not interested in that. I want to look at a fair value gap that has not been traded into yet, that is coming off of this fair value gap to then come into the unmitigated resistance area. So I'll show you what that looks like. Let's find another one. On the 1 hour, do we have one? Yes, we have. This is exactly what we would want to see. We have a 1 hour fair value gap right there pushing into the daily fair value gap. This is our first resistance area. Now again, it might not be the actual first fair value gap that we come into, because of course on the 1 minute we can find another fair value gap that was a little bit higher that we came into right there. Yes, correct. But remember how those time frames need to be in alignment. Those time frames, the 1 hour right there is stronger than the 50 minutes and it's stronger than the 5 minutes. So the 1 hour for VWAP here is going to be the strongest. Meaning, if the 1 hour, or we want to actually push price higher, then the 1 hour for VWAP right there is going to be responsible for pushing price higher. Not the 15 minutes for VWAP above it, because that's not in context, right? So the 1 hour for VWAP right there is going to be responsible for pushing price higher. So the question becomes, we are either going to continue lower off this daily VWAP, or we are going to continue higher off of that 1 hour VWAP. So then it becomes quite easy where you're waiting for one of those to follow through, where it's more likely, of course, the daily VWAP to follow through right there. But in rare occasions, we will also follow through on the 1 hour VWAP right there, continuing higher on the lower time frame fair VWAP. So right here, what we would want to see right now is ideally we want to see the transition of order flow. This 1 hour VWAP is currently closing, or that candle right there is currently closing in 13 minutes. Once that closes and we have a candle like this, we can assume there's a rejection right here taking place. So the next candle in an ideal world should be an up candle. And when that is an up candle and we follow through on those bullish VWAPs, perfect. Then that could be very interesting to continue higher even, where we are not continuing lower. But if that is not an up candle and we now start to get signs that this 1 hour VWAP does not want to follow through, then once we actually start to, on the 15 minute right here, close below this 1 hour VWAP right there, in the form of potentially something like this, that right there is extremely high probability to continue lower off of that. And again, I don't want you to see this as a support now turn resistance, as an inverse fair value gap to then trade off of that. No, if you want to trade off of it, then just look at fair value gap here on the right side of your chart. But it's a great indication of the switch of order flow. That is what I'm trying to tell you right there. So here, the highest probability thing to happen is that we first disrespect this 1 hour fair value gap right there, which we can tell by, of course, the lower time frame as well eventually, where we can, of course, go even crazier, because then we have the same resistance area that we had right there, which is not clearly seen here because we do not have 5 minutes fair value gap going into it. 1 hour right there for value gap. Do we have fair value gap going into that 1 hour for value gap? Which currently we do not have actually, not an unmitigated fair value gap. That would need, then we need to go into the 1 minute right there, which it would then become this 1 minute fair value gap, which we can see the same price action. And the premise of this story is understanding which fair value gaps are high probability to trade, which fair value gaps are low probability to trade. Because this situation does not only happen on reversal areas like we're showing right here, it also happens on continuation areas. And what that means is something we'll dive into. But first, let me go over some questions here. I don't have this 1 hour fair value gap on my chart. Let me see. That could be in the bottom right. You have 10 minutes delay. That could be it as well. That could be it as well. I believe, is this part of the CME thing? Live data? That could be it. That could be it. And otherwise, it might be at the bottom right, the contract thing right there, the BADJ right there. Let me know before we move on if we do have any questions. Let's wait for that before we move on to clear any doubts. This was a reversal scenario. The reversal scenario is also, of course, going to be present in the continuation scenario. Just a little bit different. What about the other fair value gap in the same lag? Which one? The lowest one right here on the 1 hour. That's a great question. And this is, well, that's exactly what we're going to go into actually after this. It's the continuation. It's not necessarily the first transition, so not the first reversal area. It's still an important area, but we're going to approach it a little bit different right there. And I'll show you in a little bit. So if re happens above resistance area, then it is low probability. That's a great question as well. And yes, the re happens, as in order flow is likely still confirmed on lower time frame. The only thing is when a re happens right here, above the resistance, above the support area in this case, then likely we are going to see a very misery ST plus re. And what I mean by that is sometimes you have ST plus REs that where the first ST is very nice in the form of this right here. First ST is very nice. And then you have a RE in the same leg of that ST leg. I'm sure we've all seen it before, an ugly RE, exactly. And that usually happens when we are still above that resistance area right there to then just do something like this to then continue higher off of that instead. So yes, I would argue it is indeed a little bit lower probability. Of course, we also need to see how it actually works with the data, etc. Let's see. Can you go over what we can now do with the 1 minute fair value gap going into the 1 hour fair value gap? Yeah, for sure. So essentially, right here on the 1 minute fair value gap, we want to wait because this 1 minute fair value gap is extremely low probability to trade off of. Meaning we are simply stuck between a premium and a discount right now, right there. This area is where we are stuck between a premium and a discount. There's no clear premium in the market, no clear discount in the market. There's no order flow that is in charge of current price action, meaning we might make the switch between order flow as well. So this 1 minute fair value gap could be interesting eventually, of course, if it wants to follow through, still continuing lower. Perfect. That could create the 15-minute ST plus re-entry for us. After, if it does not want to follow through and we start to disrespect this, start to continue higher, then that could indicate that we might actually not want to continue lower at all and we want to continue higher right there. So the best thing you can do with this 1 minute fair value gap is waiting, if that makes sense. Can you give us your thoughts about GBP Australian dollar this morning, please? For sure, for sure. Let me go over that in a little bit. So you can somewhat invalidate a daily fair value gap after looking at the 1 hour fair value gap and how the fourth candle is created. Would this be equal to invalidate a weekly fair value gap after 4 hour fair value gap and a monthly fair value gap after daily fair value gap? Yes, for sure. And it would depend, of course, in this case, which fair value gap we actually come into first. As in, if on the monthly right there, let's see the example. This monthly fair value gap right there, if there was a weekly fair value gap going into it, then we would have used a weekly fair value gap, if that makes sense. And if it was, instead of a daily, it was a 4 hour right there, because we didn't have a daily fair value gap, it would have been a 4 hour, if that makes sense. So it really depends on whichever fair value gap we have going for us right there. So in this, it's just, well, it might just be as a general rule of thumb, those time frames. Is RJ's voice breaking for everyone? Ooh, that could be my internet. Let me know if you can hear me. And this right here, the daily fair value gap is, in this case, the 1 hour could have also been the 4 hour. Sound fine? Okay, perfect. Let me say, which time frame do you want to see fair value gaps on for longs? So right here, if we want to follow through on longs, then that is exactly the continuation. I'll go over it in a little bit. Don't worry. Let me answer this question before I dive into this as well. Okay, so the highest time frame fair value gap is the one you use. Exactly. That's the one. So now it becomes a different story where I'm going to answer the question here from Yannick and from, let me see, as well, Phil. Remind me of those, and as well, Joaquin right there. Remind me of those questions. And I'm going to hopefully answer a few right here automatically. So now when we don't look at a reversal and we look at a continuation, it becomes a different story, right? Where here, if we want to continue, the order flow was always bullish because when we came into this daily fair value gap, we just simply went higher. So order flow was bullish. So if we are continuing higher right here, then we can still expect a rejection of this daily fair value gap. And when we get that rejection right there, this first fair value gap right there is still low probability. So the first resistance area is still lower probability. But once the rejection is done and we now come into the 1 hour fair value gap and we continue higher, creating a new 1 hour fair value gap right there, displacing above the high right there that we came into first. That was used to come into the daily fair value gap. And we create a new 1 hour fair value gap right there, continuing higher. That 1 hour fair value gap is exactly what we would want to trade off of because premium rate is not strong enough to push price lower. So the discount rates are still in charge. So that is when we can look to continue higher off of that. That is what creates overall a continuation. Now let's see if we can find a good example. One good example, of course, is the dollar right here. Let's see, forecast and the dollar. And on the dollar, we are also coming into a monthly fair value gap right there. Now on the daily, we actually have a fair value gap, a daily value gap in the making as well, right there. So this daily value gap will be very interesting because either it will be responsible for pushing price higher or we will disrespect it to continue lower. So this might be a reversal or a continuation situation. And a reversal situation is the one we saw on crude oil at the top right here, on this daily value gap right there. It was the first examples that we went over. Then on the dollar right here, it's not too sure, right? We never know if it's actually going to reverse or if it's just going to continue. All we can wait for is for price to come into this daily value gap right there. And once it comes into that daily value gap, and we have the rejection, because otherwise it would not come into the daily value gap if it doesn't give a rejection at all. And then once we have that, and it follows through with a new daily value gap higher, that's exactly what you would want to see for continuation. And then the new value gaps right there would be high probability. Where this overall price action is something you would want to wait. So the same on crude oil, what we're seeing right now currently, is price action where you would want to wait. And the same thing goes for every single fair value gap that we encounter after. Meaning, after this daily fair value gap right here, we come into a new daily fair value gap, or most likely we are going to target a new daily fair value gap because this right here is the next premium rate that we have. So that is likely the next target. So when we then reach this next target right here, this area, I'm going to need to explain this very clearly. So if there's anything you do not understand, please let me know. When we create a new 1 hour value gap right there going higher, that new 1 hour value gap is an indication that we did not want to follow through on that premium rate. So we still have overall bullish order flow on the 1 hour time frame right there. That also indicates that this is not the value gap that we want to continue lower off of. So the area where we create that new 1 hour value gap right there towards this new target on the daily right there, the next premium rate, simply said, our next drawn liquidity, then this right here will be our highest probability price action right there. Above that high to continue higher off of that. Where in this fair value gaps going higher is exactly where we can look to trade. And then we need to understand that we have the same thing again. We arrive at a premium rate at that daily fair value gap right there. That again is resistance for if we want to continue higher. It's also a potential reversal area. So either it's going to act as resistance and we continue higher, or it's going to be resistance as in we are going to reverse off of that. So when we arrive at that right there, it's the same situation. The 1 hour or whatever fair value gap is being created going into that daily fair value gap. So it can also be the 4 hour, can also be the 50-minute if we do not have any fair value gaps right there. Then we wait for the rejection and we see we have that first resistance area right there. Do we continue higher, creating a new fair value gap higher? Perfect. We can look to continue higher right there. Do we continue lower right here, disrespecting the first resistance area? Perfect. That's exactly when we can expect lower price as well. So we are trading in between constant resistance areas, support and resistance areas. And that is the important thing to understand here. So let's see if we can find an example as well. And let me go over GBP Australian dollar right here. Let's see. Let me see. Can you give us your thoughts about GBP Australian dollar this morning? Yes, of course. Let's see. So GBP Australian dollar right here, I was mainly waiting for this weekly order block to be actually hit right there. And I was not super interested actually in higher prices currently. And the reason being for that is because the sweep is very nice. And I do think we have potential unusual context here to continue lower a little bit. We also have this daily value gap right there, which again, I do not really like. And the reason being for that is because overall we had the respect of the premium raise right there. So it's not the highest probability in my opinion. Then after, of course, if we do get a nice confirmation, then we can look to follow through and potentially trade towards the weekly order block right there. So this is where the same thing applies actually. In this daily value gap right there, what is a value gap that was responsible for pushing price into that daily value gap? Let's see. On the 4 hour, do we have something? No, there's no value gap going lower that wasn't mitigated just yet going into this daily value gap. Perfect. On the 1 hour, do we have something? Yes, on the 1 hour, we have this sitting right here. that fair value gap right there. Where after this fair value gap right there, we already see a bullish fair value gap being created. A nice sharp turn being created as we know it. And after that, we just continue higher off that, fully disrespecting this 1 hour fair value gap. That's a great sign. So if we want to look at a 15-minute entry, let's actually see. The same thing would apply right here, where the 1 hour fair value gap is a little bit later right there. If you were to enter off the 15-minute right here, they can also look to incorporate the 15-minute actually. But for example, the 15-minute fair value gap that pushed into the daily fair value gap, which is again, in this case, if we want to look at our entry pattern, it's the lowest fair value gap. The lowest fair value gap that pushes into it. To see that transition of order flow right here. 15 minutes fair value gap right there, pushing lower into it. The resistance area right there, where we consolidate. Perfect. Creates a sharp turn. We wait for the re right there. And after we have the re, we still have the 1 hour fair value gap in mind as well. But it's already a little bit less resistance right there, and we already close above it. Perfect. Great signs to already look for an entry right there, continuing higher off of that. Now, after this, it is the same story that we might run into a few resistance areas in the form of fair value gaps, which could be targets as well. And you would want to do the same thing over and over and over. And again, it brings more clarity. It's not your entry pattern per se, it's more so it brings more clarity. So if you do not like to use it, then don't use it, I would argue, right there. Let me see. IRO, is there a general rule of thumb for the time frame pairing? Like you said, if there's a 1 hour fair value gap rejecting off of to go higher in daily fair value gap, then the daily fair value gap might not be valid anymore. I know you said it can be at any time, but I'm sure a 15-minute fair value gap hybrid in a bearish fair value gap would not be as valid. Yeah, for sure. It's in this case, the general rule of thumb is, I think Lutfisk right here above it mentioned it really well. That's a general rule of thumb. It's more so about if we go down time frames, which fair value gaps are we encountering? And then at a certain moment, of course, it's also important when we have then a 5-minute going into daily fair value gap. Yes, indeed, that is not super high probability anymore, if that makes sense. But the general rule of thumb, not really. Not really. I would say daily, 1 hour fair value gap, weekly 4 hour, monthly, daily. Like Lutfisk here above mentioned as well. Don't look at trades taken. I won't. No, it's all good. It's all good. Again, what I find low probability, you might not see as low probability, right? So it's very important to understand as well that just because you took the trade doesn't mean it's a wrong trade, if that makes sense. Regarding GBP Australian dollar, could it be a case of unusual context? Price rejected off the weekly fair value gap, but the next candle is not forming a new fair value gap. Price could be reaching for the previous week low, but I'm thinking the candle has yet to close. Yes, that's exactly what I was thinking actually. Unusual context right there, which currently is not playing out, but I was expecting unusual context right there, with ideally a move into the order block first to then create the unusual context. If the second fair value gap is not overlapping with another PD ray, we suppose that it's not going to hold either, right? Second is not overlapping. Yes, exactly that, because then it's a standalone PD ray. Exactly, Joaquin. Perfect. Can you go over Australian dollar, Canadian dollar if the unusual context was valid or rather not, because we can still create a bearish weekly fair value gap? Let me see. Gold is just doing nothing. Felt a little FOMO, not gonna lie, but the overall idea made sense to me. Yeah, the overall idea is not wrong. As in, even if we do not follow through on those highs right here, we still can expect a rejection like we're seeing right now. So it's perfect, right? Let's see, Australian dollar, Canadian dollar. That will also be the last thing I go through. We will dive deeper into this topic as well, going into Thursday, into the next live session. And to again go over everything that needs to be cleared up. Here we see it actually perfect again. On the monthly right there, we have the monthly fair value gap right here. Or what is it actually? What have I marked right there? Weekly. Sorry, weekly fair value gap right there. And that weekly fair value gap is currently actually being pushed into by this daily fair value gap right there. It's quite high up. And wait, I'm sorry. I believe, if I remember this price actually correctly, I believe, did we come into it already before we reached the weekly fair value gap? No, we did not. All right, perfect. So right here, either we are going to continue lower off this daily fair value gap or continuing higher a little bit off that weekly fair value gap right there. And right here, it is quite important. We have a weekly fair value gap in the making as well, right there. Then on the daily right here, we're not following through of that daily value gap, because we are not creating a new daily value gap lower of that. So to me, it seems like we are currently sweeping this low right here to potentially continue higher a little bit. In an ideal world, we want an expansion phase to be created currently, which then the target would become this high, creating unusual context on the daily currently right there. Now on the 4 hour, how can we deliver towards that? We have 4 hour value gaps right there, potentially continue lower. And this is the same case, perfect example actually. 4 hour value gap right there, which is not necessarily something you would want to trade off of, but it is a target. Meaning when we reach that, it's resistance. It's some form of resistance. So here we see actually on the same time frame, we came into that 4 hour value gap with this 4 hour value gap. The rejection is right there. So once we start to follow through with a new 4 hour value gap higher right there, that's when we can confidently target this swing high as well, sitting right there. So it's actually pretty interesting price action here on Australian dollar, Canadian dollar. It's quite interesting. So in the meantime, this is also not something where I would want to go into the 5 minute, into the 50 minute. I would want to wait for 4 hour value gaps right there, continuing higher again, to have the highest probability, no resistance price action right there, if that makes sense. All right, currently I do have to run, so excuse me for that. I'm also going to end the recording right here.